Hi, folks. You're welcome to the next episode of the ICT Concepts. So now in this video today, we will be discussing about internal range liquidity and market structure shift. Okay, so one of the things I want you guys to know is that in Forex, you are majorly focusing on how you will be able to know what direction the price is moving. Okay, now if the trend is up and then it's about to reverse, how will you know that it's about to reverse? And then when it is coming down and then it reaches a certain point where it will reverse, how will you be able to know that the market is going to reverse? Okay, one thing I will want you guys to know is this: how the algorithm works is that it tries to target the buyers that are buying at the highest price and then the sellers that are selling at the lowest price. That is what the market is trying to do. Okay, so it's trying to be taking out people, stop losses, and then other people's stop orders, activating it and then canceling it out by hitting their stop losses. And one of the things I will want you to understand is I will try my best to ensure that I explain these lessons to a molecular level that you will be able to understand with high precision as to what the market is doing, and you will have that basic understanding from me. Now on this chart, we are on Euro JPY, okay, currency pair Euro JPY, and on a 15 minutes time frame. So we are going to be looking at this very point where the price reversed, okay, because one of the things you need to know if you want to be able to know what the price is doing is for you to study the previous chart histories and then try to understand what the price usually do before doing what. Okay, so if you are able to understand that, then it will be easier for you to be able to predict what the price is going to be doing next. Okay, so now if you look at this point, we are trying to study this particular point where the price reversed. Okay, because the price was coming up, very seriously, and then it decided to reverse and then move down, very significantly. Now what happened here? There's a previous highest point that is around this area. Now where's that point? This is it. This was a previous highest point that the price came up and then was targeting this point. Okay, because what the market or the algorithm was seeing was there are people's stop orders here and then people stop losses around this area, and then it is trying to go up and then hit up that. Okay, now what we will be looking at, as I've said earlier, we will be looking at internal range liquidity and then market structure shift. So what does internal range liquidity do to you as a trader if you are trying to understand what direction the market is doing? Now what is range to begin with? Range is simply, you having the price moving in a particular, order in such a way that it doesn't cross significantly beyond a given imaginary line. Now, if you look at this point, this price, was just coming down. When it came down to this point, it went up. It never crossed this line. The body of the candles were still within this line. The price decided to come down again. It was just having some form of support around this area where it doesn't go down beyond this significantly. It keep on moving, and then it moved up again. It came up to this highest point, which is a resistance area, and then it never crossed it significantly. It now decided to come down again. So now this is a range. Okay, so now we are going to be looking at this internal range. Okay, now in this area, you will be able to understand that the market is just moving around, just taking out other people's stops. Now, this is what we call internal range liquidity. Okay, it moves up, it take out other people's stop loss that are around this area. It comes down again and target other people's stop losses that is around this area. It goes up again, it takes out other people's stop loss that is around. It comes down and then take out other people's stop loss that is around this. So that is what we mean by internal range liquidity. Okay, so now when you want to on what a market structure shift is, again, in another in another perspective, then a market structure shift is said to occur when the price reverse a direction. Now this price was just giving up a delivery up. Once it reached this point, it decided to come down very significantly. So this is what we call a market structure shift. So now we are going to be using our knowledge of the internal range liquidity to be able to know that this price, is going to reverse and then go down the opposite direction in a very significant movement. Now, this is it, guys. This is it. Let me explain this to you so that you will get to understand these things very clearly. Okay, so now the first thing I will want you to do is to first of all look at this point where the previous highest point is. Then you draw your line. Okay, once you draw your horizontal line, then you now study the area at which the price. Now let's say you did not see all these things that was happening in the market. Because one of the things that makes it very difficult for you to know is if the market is live and then it's just moving, you will not have access to see all the charts that is happening after this area. So now let us start studying it. So let me make it this way. Okay, now as you are waiting for the price, to hit this area, you will be looking and then watching and then looking at what the price is going to do now that you have your line. So as it is moving, it is going to be uncovering what the price is doing. Now you will be watching, and let's say now you are able to see this very candle at this point. Now let me enlarge the candlesticks so that you will be able to see. Now the moment you see this candle touching this line, then the first thing that will start coming to your mind is now that this line have been crossed. Let me see what the price is doing. Now it will form this candle, then next it will form this candle, then another one is going to form, and then you'll be watching. Okay, now another one is forming, then another one is forming. Okay, then you are just watching, is this price going to continue going up or it will stop and reverse around this area? Now there are two things involved here. There is a possibility that the price is going to continue going up, okay, and then target the next higher point, okay. And there's a tendency that another tendency that the price is going to reverse around this area, and your job is for you to be able to see the indication as to whether the price is going to reverse or it is going to move up. And that is what your internal range liquidity will give you that knowledge of. Okay, so now you look at it. Now this candle again will form. Now you can see this is trying to go up and then just coming down, and you'll just be watching. Now this is trying to come down, okay, and this is the previous lowest point. Now let me draw my line around this previous lowest point as at this moment when you are watching these charts forming. Okay, now another candle will form. Okay, now you are watching it coming down, another candle will form. Now you saw this candle forming, and then you'll be like, wow, what is happening here? It have exceeded even the previous lowest point. Now it have taken out this point. So is it that it is trying to reverse up and then taking out the people's stop losses that is around this area and around this area before going up, or is trying to reverse actually? Now you look at it. Now you see this candle have formed, okay, and then you will now be like, okay, you now wait for the next candle to form before closing, and then you will now telling yourself, okay, now is there any fair value gap around this area? Now you look at it. Is there a fair value gap around this area? Now there's a fair value gap around this area, but not that significantly visible. But then you will be watching your lower time frame. You'll be like, oh, these have formed. Okay, now let me watch. What is this price doing? Okay, now you will now go down to your lower time frame, okay, and then watch what the price is doing around this area. But I have told you something on the previous video. This thing is just forming a fair value gap, but the fair value gap did not form above this very line. Okay, so you should be looking out for a fair value gap that will form part of it above the line and part of it below the line. Then that is what will give you that assurance that the price is going to reverse down. Okay, so now you will go down to your lower time frame and then watch out for what happens. And then what you can be able to do is to draw out your box, your rectangle around the area you're watching. Okay, so now let me go down to my 15 minutes or 5 minutes. Okay, let me go down to my 1 minute chart so that we don't take much time on this video, so that we can be able to point out. Because if you look at the lower time frames, you are not able to see anything. You keep going down until you are able to see something. Okay, now this is it. Let us take a look at this, guys. Now this is the lower time frame, this is the line. Okay, at the lower time frame you will be seeing all these things forming in 1 minute chart. Now you look, okay, is there any fair value gap forming around this area? There's not any fair value gap. Now you look, you keep on watching the charts. Okay, now let us go gradually, and then let me enlarge this area so that we can be able to understand what I'm talking about. So now, is there anyone forming? Now you look at this line, it's still above the line. You keep on watching, the new candle will form. Now it have just crossed the line but have not formed any fair value gap. It's now going again. It have just crossed the line, no any fair value gap. It's just forming, then you are watching. Then around this area you are beginning to see a fair value gap that is forming around this area. Now you can see a fair value gap here, so let me draw it out. Okay, now you can see there is a significant fair value gap that is coming as a reversal on this very point, and it is dividing the line into two. Okay, so now if you look at it, you can just draw your box there, okay, and then watch what the price will do. Okay, one of the things you will be anticipating is that you will be expecting the price to continue coming down until it reverses to the midpoint around this area. Okay, now what you'll be looking at is you will look at an entry point around this area, but then another thing you will be looking at is now that you draw this line, this your line, you will now be watching out. Now, is this actually a range that is forming? Now that you know, okay, exactly that you are trying to expect the market to come up to this point, is it going to go down? Because now look at it. This was fully a range that was just happening starting from around this area. It was just forming a range. Just go up, come down to this point, go up, just come down around this point, go up, come down around this point. This is what your internal range is. Okay. Now let me draw a horizontal line also so you can be able to see the range I'm talking about. This is it. The market never crossed this particular area. Okay. This is your range. Okay. Now look at it. This is your range. Now, in the mid of that range, this is now telling you that, okay, this market is just ranging, internally between these two lines, and then it's not going up, okay? It's just moving up, down, and then it's just forming. Now, this is going to now open your eye and say, oh wow, what's the price doing around this area? So let me now keep watching out to see what the price is going to do. Now, you can see by the time you were able to see this internal range that is forming, instead of the market to just be moving up and then shooting up, by the time you see this internal range, then you'll be like, wow, so now this market is set. Now let me enlarge the screen so that we will now look out for that fair value gap I was saying. Okay, so the market will just be forming gradually and you will not be able to see what the next candle will do, but all you will be doing is you will be putting your eye around that area. But don't forget, this is where your stop loss is going to be as you are watching what the market is doing. Now look at it. You will put your stop loss around this area. Now let me color it red. Okay, so now look at it. You are now going to be targeting your stop loss around this area. What's the total number of pips between this particular entry point that we are trying to look at, and then the stop loss is just around 25 pips? Okay, that is $2.5 for someone that is using a micro lot. Okay, so now this is just going to be $2.5 risk. Now if you check that, then you will now continue watching the price. Now you will now be saying, okay, now if this price now goes down and then reverse up to this midpoint of this fair value gap that divided between these two lines, then it will be an entry point for me. Then now watch, guys, watch out, guys. Then you keep on watching. Let me draw another line around that area so that we can be able to know what our midpoint is, where our midpoint is. Then okay, now let me color this one green. Okay, our entry point. So now as the price is forming, you will just be watching. Okay, once it comes up to that green area, then you will just activate your trade, boom, and then you start going. Now by now you must have activated your trade here. Okay, after you activated your trade here, you watch it. Okay, look at it. This is where your stop loss is, this is where your entry is. Of course the price will go up and even go beyond that, but then you can't just risk waiting for too much discount, because if you are waiting for too much discount, there are chances that the market will come up and even start coming down beyond that fair value gap without you getting an entry. Okay, so at least this is a fair entry. Now the price came up and it never touched where that your stop loss is, then it will come down, keep on coming down to form another fair value gap around this area. Okay, it will now form another fair value gap around this area, but this is no longer any area of concern for you. Now look at it. It will just keep on coming down, and this is the market coming down gradually, coming down. As it is below this line now, it is going to be putting you into profit, because this is a sell you are making now, because you were able to look at your internal range and then you look at the market structure shift. Okay, now you look at it, it is just coming down, gradually, just coming down below that entry point of yours. Okay, you can see is now just forming a range around that area as though it's not going to come down. But then just watch what the market will be doing. It only requires patience from you. By the time the market just keeps on doing that, you can even exit the market, and you can even just close your charts and then just go and do whatever you want to be doing. Believe you me, the market is going to come down set for you after some time. Okay, now just keep on watching. Now look at what the price decided to do. Okay, now let me compress this so that we will be able to see what the market is doing. Now it's just came down, pew, it come down to this point and then it decided to go up a little bit, you know went up and then came down again. Now look at it. this is the price coming down. Now let us look at the distance to which the price came down. Okay, you will be able to see that you can be having a potential of making a very significant money in this chart, when you're able to do that. This is about 81%. Okay, now this is it, about 81%, which is about 81 pips. Okay, so this is what you can be able to make of this market if you understand this market structure shift. Okay, and then if for you to understand what your market structure shift is, you'll be looking at what the other block is doing. Now this one is where your other block is forming. Now the market was just coming down. This was the first order block around this area. This was the order block. Okay, just hindering the market from going up in the previous direction. And then there is another order block here. Okay, forming another order block here. Okay, so this is it, forming another order block where you will be seeing the market coming down. So this is a bearish order block, meaning it is trying to form a downtrend. Okay, now it formed another order block around this area. It formed another order block around this area. Now look at it. This is another order block. So as the price is going up, it is blocking it at some certain point now before it decided to calm down. So I believe now you are able to understand how you can be able to use the internal range liquidity, which is the price just moving between two horizontal lines below and above, and then also forming other blocks in order to signify a market structure shift, meaning the market is changing direction. I hope you were able to get this. Guys, this is something that happens every week, okay? Every week in, week out, this thing used to happen, and then you can be able to take advantage of all this knowledge you are getting, and then you go into profitable trades, okay? Now, I have an assignment for you. You can go into the charts and then begin to find out all the market structure shifts, and then also looking at the internal range liquidities in the market, and then you will be able to get familiar with these things. Because if you don't get yourself familiar with these charts, then it's just going to be someone speaking a language that you don't understand. Because forex is something that is more or less like a gambling if you don't have the knowledge and the experience. Okay, but of course, if you have the right knowledge and the experience, then it's going to be something that you will know what exactly you are doing. Okay, and if you are checking out that in the market and then you are not getting exactly what you're looking out for, please don't be embarrassed, because and then don't feel bad, because there are times when you are not going to be right in the market, especially when you're just a beginner. Then that is still fine. Okay, now there's something I want you guys to understand. If you understand these things I am teaching you guys, is not a guarantee against you losing money in the forex. No, that's not what it means. But then it is going to limit the rate at which you are going to lose money, because there are times when your analysis is going to be wrong. Okay, and it is allowed. Okay, it's just like you going into a business. Okay, while you purchase products, there are times when you are going to have a loss in that business. Maybe some of your product getting to expire without you selling it, some of your products coming as a damage or things like that. There are times when you're going to be wrong, but if you understand the market, your category of your market very well, then the out of 10 is you are hardly going to have a losing trade, two losing trade in 10 movements. Okay, so now if you execute trades, out of 10 you will hardly get a lose of two, and that is allowed. 20% loss out of all trades. Okay, now imagine you have this a risk of $2.5, and then against the risk of almost 80 pips. Let's say you won 80 pips today, giving you $80 for instance, and then you go to another charts and then make your analysis, you gain another 80 pips, which is giving you $80 if you're using a mini lot. Okay, then you go and make another one, you get $80, and then let's say you have 1 out of 10 or maybe 2 out of 10 that is going wrong. It is only going to take out this your stop loss, which is just $2.5. Okay, $2.5. So now you guys will be able to understand that these are things that you will be able to understand very well if you are making your own practice in this forex market. So I hope you are able to learn a lot of the things in this market. So guys, if you have not subscribed to this channel, I will advise you subscribe, so that when the next video comes up, you will be notified, and then you will be among our followers that will be getting all this knowledge that we are delivering here. Okay, and also if you want to have a deeper knowledge into forex understanding, then please join the telegram group for forex concepts using the telegram link I've posted in the description of this video, so that you will have access to our tutors, and then you will have access to real-time answers to your questions. So guys, in the next video, we are going to be looking at the times of the day and the days of the week that you should be looking out for these important setups. Okay, so in the next video, that's what we'll be discussing. So please don't forget to subscribe, click the notification bell so that when the video comes up, you will be notified. Thank you and see you guys in the next video. Bye.